Hello and welcome to this video. In this particular video, we are going to be taking a look at the Finviz Overbought RSI screener settings, and the most importantly, we are going to build a very nice and sound trading strategy around that. So you have to understand that there will be a lot of people telling you to trade just based on the RSI when the RSI is oversold or overbought, but that is not a good trading strategy because if you just make trades based on whether RSI is oversold or overbought, that itself is a very poor trading strategy. We need to club it with a lot of other factors like the various chart patterns, the analyst recommendations, and a lot of other things to form a sound trading strategy. And along with that, we club the money management rules so that the probability of making profitable trades goes very high. So in this particular video, please watch till the end because we are going to look at a complete trading strategy based on the RSI, not just based on the RSI signal, but we are going to club all these factors together to come up with a profitable trading strategy. So let's proceed. A quick preview as to what all we will be covering in this video. We will first understand the basics, what are oversold stocks. Next, we are going to take a look at what actually is the RSI or the relative strength index indicator and how it basically represents the price action in a quantifiable number. And as I mentioned, the RSI basically quantifies the price action of a stock into a number between 0 and 100. So there can be different levels of overbought conditions using the RSI. So we'll understand what does an RSI of 70, 80, or 90 mean, what implications does it have, how can we use it in our trading strategy to make profitable trades, and also how these things will reflect in the chart patterns exactly. Finally, we are going to use the Finviz stock screener and we will come up with a list of stocks which don't just satisfy the RSI criteria for being overbought, but at the same time will also include a lot of other criteria which will form a totally comprehensive sound trading strategy that we can use on a day-to-day basis. Then we will club it with kind of an option trade which will further reduce our risk by providing us an additional cushion. So all these things taken together, our strategy, the different criteria, and the money management rules will basically make sure that we have a strategy which gives us profitable trades most of the time. So let's get started. And before we proceed, a quick look at the disclaimer, which essentially states that whatever information I am giving you is only for entertainment purposes. This is not any kind of trading or investment advice. So first of all, let's understand what are overbought stocks. As the name suggests, overbought means something which has had a lot of buying recently. So in the stock market, if you look at any stock, right, there is buying and selling which happens every day. On some days, the buying pressure is more than the selling pressure, so the net change in price is towards the upside. When buy pressure is more than the sell pressure, the price tends to go up. When the reverse happens, that the sell pressure is more than the buy pressure, the price goes down. This is basically supply and demand, and there's nothing very complicated here. But the overbought condition basically implies a condition where too much buy pressure has come in a very short span of time, thereby pushing up the price by a lot. And when I mean a lot is relatively the price action which normally happens. So different stocks have different volatilities. So what happens is for every stock we can understand what's the normal movement. Let's say the stock is going in an uptrend, what's the normal movement towards the upside within a week. If the movement to the upside is about 3 times or the stock has shot up towards the upside in a particular week, then the RSI on that stock will basically go into the overbought condition and the stock is said to be overbought. So RSI is basically a calculation which is done on the price of a stock, and it looks at the price not just for one day, it looks at the historical price of a stock over the past few days. Usually the 14-day RSI is used, that's the most common RSI which is used, and so it is going to look at the past 14 days of price action and it determines whether the recent price action is too aggressive. Is there too much of buy pressure because of which the price has gone up significantly? And the reason why RSI can be used to form a trading strategy is that stock price movement actually behaves like a rubber band. If you take a rubber band and you stretch it in one direction, the more you stretch it, the more tension gets created in the rubber band, and the higher the tendency of the rubber band to basically revert to its mean position. Same thing happens with the stock. When stock prices shoot up and they shoot up very significantly within a very short span of time, then they become due for correction. The prices tend to come back. if you want to really understand what's happening behind the scenes in terms of the trader psychology or the market psychology or the market behavior as such, understand that initially there is some catalyst because of which the price of the stock starts going up. When the stock price is going up, then a lot of people are watching the stock, they get interested, and sooner or later that fear of missing out, or FOMO as it's called, sets in, and everybody actually wants to jump into the stock and basically make an investment because they feel that they're missing out on a great opportunity. This further increases the buy pressure and the price starts going further up. So over a period of time, in a very short span of time, this layer upon layer of buying pressure basically pushes the price very high, and at some point of time the price becomes high enough where people start feeling that they should start taking their profits, so they start selling. And at that point, the upward movement to the price, it basically gets arrested, and then because of the sell pressure which has now got created, the price starts falling down. When the price starts falling down, then again people who got in, they start panicking because now they want to exit these trades, because for some of the people who bought right at the peak, these are becoming losing trades and their stop losses are getting hit. So for those people, now they start selling, and when they start selling, the price actually starts falling down. So overall, if you see the price action, it basically acts like a rubber band, and when it gets stretched in one direction, let's say to the upside, then the next thing that happens is that the price tries to revert to the mean. So with this explanation, I believe that the definition of what is an overbought stock is should be clear by now. So let's proceed further and understand what is the RSI. So now different stocks have different price levels, right? We need some mechanism to understand whether a stock is in the oversold territory or the overbought territory. So in order to simplify this, in order to basically have a common metric for all stocks that can be used across the markets, what has been done, this indicator called RSI, or the relative strength index, has been developed. And what it does is it converts the price action. It looks at the price action for the past few days. Let's say I'm using a 14-day RSI, then that is going to apply a formula to the 14-day price, the price of the stock for the last 14 days, and it is going to churn out a number between 0 and 100. The value between 0 and 100 basically suggests whether a stock is overbought or oversold. If you want to understand the strategy using the RSI for oversold stocks, then I have a separate video. I will leave a link to that in the description, because that is again one of the very common strategies which is used for trading purposes, and I use it extensively. Uh, but here in this video, we are concerned with the overbought conditions. So when the RSI value, which can be a number between 0 and 100, is above 70, then the stock is said to be overbought. So we basically want to focus on this strategy when the RSI value is going to be greater than 70. So RSI in itself is not doing anything. If you see, then the only two pieces of information that come out of any stock exchange are price and volume. And RSI, all it's doing is it's taking the price of a stock and it is converting it to a number between 0 and 100. And basically it is representative that if the final number that comes out after the RSI calculation is above 70, then we can say that the stock is basically overbought. And if you look at the corresponding charts, then you will see that the stocks are actually overbought, and that they have made a recent significant move in the upward direction. So RSI is a technical indicator based on the price action, churning out a number for every stock between 0 and 100, which suggests finally, based on whatever number gets churned out, whether the stock is an oversold or an overbought condition. Now, as I said, that the output of the RSI can be a number between 0 and 100. So for overbought conditions, any value of RSI above 70 is considered overbought. So it can be 70, it can be 80, it can be 90, it can be between these numbers. So these are different RSI overbought levels. So what is the difference between these levels? So any stock which, let's say, has an RSI of 70 is also overbought, and a stock which has an RSI of 80 is also overbought. But what's the difference here? So a stock which has an RSI of 70 is overbought, but the buying pressure is not as high as for a stock which has an RSI of 80, and a stock which has an RSI of 90 has an even high buying pressure. So two things will be here. Buying pressure is more aggressive for stocks which have RSI closer to 100. Secondly, if you look at the charts, then you will see that stocks with RSI 70 will have a lesser steep towards the upside as compared to stocks which have an RSI of 80. So if I look at a stock which has an RSI of 80, the chart will actually be kind of vertical. The price would be shooting towards the upside almost in a vertical line. Whereas for a stock which has an RSI above 70, but which is, let's say, 72, 73, not beyond 80, the upward trend would be there in the chart, but it would not be as steep or as aggressive as it would be for the RSI which is closer to 100. So different RSI levels basically signify the pressure or the aggressiveness with which the price has shot up in the last couple of days. If RSI is closer to 100, then the price has gone up more aggressively. If RSI is closer to 70, then the price has gone up less aggressively. Now let's head over to the Finviz platform, and we will basically look at the Finviz screener for identifying first of all the stocks which have RSI in the overbought condition, and then we will apply a lot of settings in the screener itself to formulate a complete trading strategy, and then we will club it with a kind of option trading which gives us additional cushion in case the trades go against us. So we will look at a complete sound trading strategy, not just based on the RSI but a lot of other factors. And for that, let's head over to the Finviz platform to see the actual trading strategy formulation in action. So this is the Finviz platform. For those of you who have not seen this platform before, I will leave a link in the description. You can check it out using that. I am using the free version right now. This platform comes with a paid version, so if you like the free version, you can try it out, and then you can basically sign up for the elite version, as it is called in Finviz. And it's not very costly. If you sign up for an entire year, it's less than $1 per day. So let's get started. And first of all, once you are on the platform, you need to go to the screener link here. And once I get to the screener, I basically go to all. If you've not used the Finviz platform before, then I have a complete tutorial on how to use this particular platform. So I'll leave a link to that in the description, and you can see that video to get a fair understanding. It's a step-by-step tutorial on the various features that Finviz has to offer, and also it has step-by-step instructions on how to use those features and get the maximum out of this platform. But for now, I'm assuming that you've either watched that video or you're familiar with how to use Finviz. So I'm going to do a couple of filters and settings to basically build our trading strategy on the oversold RSI. So I have clicked on all, so all filters are available to me on the same screen. Right now you can see that in the results 8,238 stocks are being listed. This is basically the entire universe of stocks being listed here. Now we need to narrow down to the stocks which are tradable based on our trading strategy. So the first thing I'm going to do is I'm going to apply the market cap filter, and I'm going to select stocks only with a market capitalization of above $2 billion. For those of you who have seen any of my other videos, this is a common filter that I put. Why? Because I don't want to deal with stocks in companies which have very small market capitalization. What happens is when companies have very small market capitalizations, their stock price is really volatile. Why? Because a single high net worth individual or hedge fund uh, taking positions or exiting positions from this particular stock can send the price up or down by a huge amount, and we don't want to basically work with such volatile stocks, because the way we will make money using our strategy is if the stock price does nothing, or it goes in our favor, or it goes against us but not very aggressively. So this is a strategy which makes you money in all three directions, whether the stock price does not do anything, or the stock price goes against you but to a certain extent, not very aggressively, or it goes in your favor. So for that, I want to pick up stocks which are not absolutely volatile, which are not so aggressively volatile that we will basically hit that point that the stock price went against us, and it just didn't go against us by a small amount, it went against us aggressively. That's the only scenario which we want to avoid. And in order to avoid that, I'm basically using the filter to select market capitalization above $2 billion, so that we are not dealing with very small companies which have very high volatile prices. So this is the first filter. Next thing, I want to pick up very liquid stocks, so I'm going to pick up volume over 500k. So when the average daily volume is going to be over 500k, that means more than half a million shares of these companies get traded. That means I'm looking at liquid stocks, and these liquid stocks, if you've seen my other video on the Finviz options screener, then you will understand that a concept which is told there and explained there is basically that stocks which have liquidity in terms of the volumes of the shares traded tend to have liquidity in the option chains as well. So for those of you who trade options, like I trade mostly in options, I don't buy stocks unless I'm doing covered calls. It is a good idea to have this filter of a high average volume. You can even put it more than $1 million, so that you only filter down to stocks which just don't have liquidity in the stocks trading itself, but they also have liquid option chains. I'll leave a link in the description again for the option screener video as well, so those of you who want to take a look at it, you can get into more details. And since, as I said, I only trade with options most of the time, so I'm only going to select stocks which are optionable. And now you can see I've just put three filters here, and from 8,000 plus stocks we are down to 1,400 plus stocks over here. So we'll keep putting more and more filters, and as we keep putting more and more filters, eventually we are going to build our trading strategy. And then we want to land up with the universe of stocks which is sizable enough, about 40, 50, maybe 60 stocks, that we can analyze, and we can see if those represent profitable trading scenarios, and we can basically take a position there. So the next thing I'm going to do is set the target price which is below price. Now this is the overbought strategy. So we are trying to say that a certain stock got overbought. That means the price has gone up to a level where we believe the price should never have reached. The true price should be much below that. So we want to be on the right side of the analyst. So with this filter, what I have done is I have selected stocks which are right now trading. The current price for those stocks is higher than what the analysts have given as the target price. So for example, if you look at the first symbol here, the current price is 176.68. And if I open this one to see its details, then let's look at what is the target price that the analysts are recommending, and this is going to be the average target price which multiple analysts are recommending, and it is 170.76. So this particular stock is right now trading at 176, and the target price is 170.76. So this is pretty close to the target price, but it is still below the target price. So what basically it means is the stock has made a significant move to the upside. This information we are getting because we selected RSI as oversold above 70, and also analysts are predicting that the right price level should be around $170. So understand that the chances of this stock to revert back to its target price are much higher because it is already trading at a significantly higher price. Now, in this case, the difference is not too much, but let's say the target price for some stock is $100, but right now it is trading at $200. And the RSI is also overbought. So what does this imply? What it implies is that the analysts are feeling that this stock should be trading at $100, but it's gone way above that price. So there is a pretty good chance that the price is going to come down and revert back to where the analysts feel the real value of the stock is, and it should basically revert to the mean, as I gave the example of the stretch rubber band before. So let's close this and let's continue building our screener and the trading strategy. Now I'm going to basically select the overbought, and that will be above 70. So now I think I had not applied this filter earlier, but still, even after I have applied the filter, we saw that this symbol is still coming up. So incidentally, the first symbol actually belongs to this category, which is actually an overbought stock. So now you can see that this list is much more manageable. 55 stocks is basically something you can go through and you can understand. So let's quickly go over to the charts and see what has happened till now. So if I go to the charts, then on this platform, one very good feature is that I can list all the charts in one go, and I'll switch to the candlestick charts so that I can see even more charts on the same screen. And now once the page loads, you will basically be able to see multiple charts here, and one common flavor that you will see across these charts is the fact that there is a recent aggressive move to the upside. Look at this, look at this, look at this, look at this. So why is this aggressive move to the upside coming up? How are we selecting these stocks? That is happening based on this RSI being overbought. Because RSI being overbought, the signal, the RSI value for a stock will go above 70 only when there has been a recent explosive move towards the upside. And so we are selecting all stocks right now which have had an aggressive move to the upside, but for which the price has already overshot the target price set by the analyst. So these stocks are no longer trading within the range that the analysts feel that they should be trading. They have actually overcrossed and surpassed that price. And so chances are, for both reasons, because there has been an aggressive move to the upside, that a correction should happen, and also because the target values or the target prices that the analysts are setting have actually been crossed. So these stocks are way more expensive than where they should be, and they are due for a correction. So let's keep building our strategy. And another thing that we can add here, and I'm not sure if we'll get any results, because a lot many times you don't get any results when you apply all the filters. The other thing that I want to basically see here is if I have any candlestick pattern which has a long upper shadow. Now what do candlesticks with long upper shadows mean? So candlesticks which have long upper shadows, now we got one, So let's open this chart and let's basically see. Uh, so this will be easier for me to explain once the chart loads. Yeah. So let's understand this particular chart and let's see why I'm saying that this particular stock is a good candidate for the strategy that we're trying to build. First thing is there's been an aggressive move to the upside. This is evident here, right? So this aggressive move to the upside itself warrants that now there should be a correction. The second thing which is supporting that is look at this price level, which is about 31 level. Earlier also from the 31 levels, the price actually took a downside turn and it started dropping. So basically this 31, 32 level is a pretty strong resistance for this particular stock. Now also at the 32 level, we've created a candle which has a long upper shadow. This long upper shadow basically implies that initially bulls were in charge. They kept taking the prices up, 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 but the last three candles, all three of them have long upper shadows, implying that on all 3 days, this is a daily chart, so on all these 3 days the bulls did try to take the price much higher, but then the BS got in control and they pushed the prices lower. So what basically this price movement is indicating is, if you look at this green bar, this was a total control by the bulls. The bulls were in control, they took the price really high and BS couldn't do anything, but here slowly they are losing steam and the BS are getting in control. So if I now see a red candle with a long upper shadow in the next 1 or 2 days, that is basically going to confirm this particular resistance level at about $31 levels, and then that is going to kind of signify that this upward move is about to end. And that rubber band concept that I explained is basically this, that the price got overextended to the upside. First thing we want to identify is that the upward movement is getting arrested, and then possibly there can be a small correction so the downward move can happen back to these price levels. That's the first parameter based on the RSI. The second thing in our favor, look at the target price. The target price is 30 bucks. So right now this stock is already trading above its target price. It's not by much, but it is trading above the target price. That means for people who are trading or investing based on analyst recommendations, they are not going to buy this stock, because they also will find that this particular stock is overextended and there is basically no upside potential based on the target ratings provided by the analysts. So there are two things which basically essentially three things which are in our favor right now: the candlestick pattern, the resistance level, the oversold nature of the stock, and the analyst recommendation. So four things actually are in our favor. So this is how you build a trading strategy. If you just trade based on the RSI signal being more than 70, that is not enough, because it does not put enough odds in our favor to improve the probability to an extent that we should have a profitable trade. If we work with all four parameters in our favor, that the candlestick patterns are supporting us, the resistance levels are supporting us, the analysts, we are not going against the analysts also, and then we look at the RSI overbought indicator also. When you club all these criteria, you're basically stacking odds in your favor, and when these odds they get together, they synergize together, they form a comprehensive trading strategy which yields much better results than if you were to trade simply based on the RSI value being above 70. So we've put a couple of filters till now. Let's put one more filter, and I want to basically pick up stocks which are having a recommendation of hold or sell. And hold or worse means the recommendation will be either hold or sell, and there is nothing here. So buy or better is not required. So we don't have anything coming up with hold or sell. If you can find that, then that's good. So for now, I'll remove the candlestick filter, and again now I'll try, because I got 56 stocks now. So I am going to again see if I get something listed on not hold or better. I needed to put hold or worse. So I'm going to put hold or worse. Why hold or worse? Because we want to find out stocks which do not have a potential to go any higher. So I want to see analyst ratings of hold or sell, a moderate sell or a strong sell. And now these 14 stocks, they are not just satisfying the criteria that I just mentioned, they are also satisfying another criteria that analysts feel that these stocks should actually fall in price. Let's look at another example to put this point across. So we'll just give a second for the chart to load. Yeah. So let's look at this chart. So point number one in our favor, the aggressive price action towards the upside. Very, very aggressive price action. Whenever this kind of a price action to the upside happens, the stock is overstretched to the upside, then we expect a correction to take place. That's the first thing in our favor. Second thing, is this a resistance level? Yes, this is a pretty strong resistance level. Look at what happened here. Aggressive move to the upside, which got arrested at these levels. We're reaching the same levels again, and again, this is a resistance level. So chances that the resistance is going to be broken are low. Chances that this resistance level will hold and the price will come back down are high. So two things in our favor till now. Third thing, the candlestick pattern. Look at the last candlestick here, the last but one candlestick. It has a huge tail to the upside. What that means is that on that particular day, the bulls tried to take the prices way higher, but then the bears got in control and they pushed the prices much lower. So till now, this is not a reversal pattern. This basically is signifying the same thing that we saw in the earlier chart, that this kind of an explosive this is where the entire ammunition or fuel was there when the bulls were simply out of control. The bears couldn't do anything. The bulls were totally in control. But here the bulls are slowly transferring power to the bears. I would not say, because we've not seen a red candle, that the bears have come in control and the price is going to revert now. But we can definitely see that as we are reaching close to the resistance levels, the recent resistance levels which are here, the bulls are not having the same power, the same energy to push the prices through like they were doing at when the price was at this level, right? So now slowly the bears are coming into control. So if I see a red candle or 1 or 2 days, it is basically going to signal one of the two things. One, either there could be a consolidation at this price level, or we could see a price reversal and the price may start falling down. So we have all these three things in our favor. The fourth thing, right now the stock is trading at $10.56, and look at the price target set by the analysts here. It is $7.71. So this stock is already trading almost $3 above its target price of 770, which is a huge percentage. It's trading above its target price by almost 35-40%. So this thing is definitely overstretched. So now you have another parameter in our favor, that even as per analysts, this stock does not belong in at these price levels. It should not be trading at these price levels. It needs to trade much lower. So we have four parameters stacked against in our favor. So now you can see that this is a stock on which I can kind of take a conceptual trade, that okay, the price is at a level where it should either get reversed or at least get arrested. That means chances of the price continuing the same way higher, are much lower now. So what do we do now? What kind of a trade can we actually take on this particular stock? I would suggest to basically do a call spread at maybe the 12 or the $13 levels. You can either do the 12 13 $12 and $13 credit spread, or you could do the 13 and the $14 credit spread, and it is going to be the call credit spread. So what this call spread is going to do is, it will make you money. Whatever premium you collect and gets credited is your money, as long as the price doesn't reach the break even price. So let's say you are doing the 13 to $14 $1 wide call spread. In that case, let's say you collect 50 cents in premium, then the break even price is going to be $13.50. So as long as the price stays below $13.50, you are going to capture that premium and you will not basically make a loss. So see how we are building the trading strategy. We are stacking all these odds in our favor, from the candlestick charts to resistance levels to the analyst recommendations to the target price set by the analyst. And along with that, we are still not believing, or we are not expecting that the price will not go higher. We are allowing the price to go higher, but the only restriction we are putting it, that from the current levels of 1060, it can go to probably 1350, but if it goes beyond 1350, that is when we start taking a loss. So you can see that this is a trading strategy where, first of all, the decision to enter a trade is based on multiple factors stacking in our favor, which increases the odds of the trade being successful. And beyond that, we are taking a trade, we are giving a pretty big cushion, basically for us to be still wrong. And only if the price makes a very aggressive move against us, let's say it just shoots up to 15 $16, that is when we take a loss. If it shoots up even to $13.50, we will not be taking a loss. So these are the kind of trading strategies which will keep you on the right side of things. And this is one trading strategy that you can deploy for overbought stocks. I have another video where I have in detail given the trading strategy on the oversold stocks, which is using the same RSI indicator. So I'll leave a link to that in the description as well. That is something I use extensively. But there are certain market conditions when you cannot find too many opportunities with in the for stocks in the over sold condition. So in those cases you can basically find a lot of opportunities in the overbought condition, and you can trade them accordingly. So I hope this video was helpful. Please like this video and subscribe to my channel, and kindly share this with your family and friends. And if you have any suggestions, you want any specific videos, you want me to create any specific videos, please leave them down in the comments, and let me know if you're planning to use my strategy that I just explained here to trade the overbought stocks. So thank you for your time, and I'll catch up with you guys in the next video. Thank you.